It's been a little calmer over the last 24 hours. Stock markets and currencies across Asia have been shrugging off concerns about Syria, and they've actually rebounded. The Indian rupee and Indonesia's rupiah also rallied, but analysts are warning that Syria is far from the only concern in the region. Rian Maelzer reports from Kuala Lumpur.
The tension among market watchers may have eased for now, but no one is breathing too easily yet. Malaysia's ringgit, for instance, remains near a 3-year low against the US dollar, while its market, while pretty much on par with this time last year, is well off record highs from earlier in the year. In recent weeks, before worries about a Western intervention in Syria emerged, foreign funds were already flowing out of the region's bond markets, equity markets and currencies. The cause? The planned tapering of the US stimulus measures, coupled with concerns about slower growth in many parts of the region.
Some of the countries are not reporting good economic numbers. The trade balance is actually, if you look at the current account balance, is already in a negative territory, it's a deficit.
What the emerging Asian economies didn't need was worries about an expanding conflict in the Middle East, possibly causing a crude oil supply squeeze.
Oil price has impact on throughout the supply chain, and the prices of goods and services is going to go up. Inflation is going to creep in, and that's not going to be very good when the demand is not very strong.
Until Thursday, Thailand's stock exchange saw 10 straight days of losses for the first time since the Asian financial crisis of 1997-98. Analysts and investors will hope that central banks and governments have learned enough lessons from the Asian financial crisis that no matter what turmoil or pressure there may be in the weeks ahead, it won't be allowed to lead to another financial meltdown. While some countries such as India and Indonesia are taking measures to try to bolster their currencies, none appears to be looking at the kind of radical steps Malaysia took in 1998, when it imposed strict currency controls. Still, investors and the public in emerging Asia will be keeping one anxious eye on the markets and currencies and another on the Middle East in the days ahead. Rian Maelzer, CCTV, Kuala Lumpur.